Welcome back, ladies and gentlemen, for what is going to be nothing short of another jam-packed daily cryptocurrency market update with yours truly. As always, if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because I drop an update just like this one around 1 PM UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that's exactly what we're going to be doing in this video. We're going to be spending quite a lot of time covering what's happening on the broader markets, and more importantly, probably than anything to everyone, the monetary system, which is a debt-based system, and how we're seeing a flight from it to the likes of gold and, of course, Bitcoin, which is going to perform to more of a degree. Not just Bitcoin, but the total market cap, excluding Bitcoin, is definitely in an uptrend against gold. So we've got some really interesting things to cover in this video. We're also going to be looking at the dollar, which, of course, is pivotal to risk assets, and we're going to be talking. So not only do we have a technical assessment that the dollar is going to be coming down, and that's going to see risk do very well, and we've looked at a number of other reasons why we think crypto specifically and risk more broadly is going to do well, but the dollar is pivotal to that. And we're going to be looking at the fact that the dollar is starting to roll over. There's a crossover with oil here. We, as always, guys, and I do apologize, have a hell of a lot to get into to help you guys be the best possible investors, be the best possible financial stewards, financial educators as you possibly can be. So without further ado, let's dive into it all. And let's start things off with something rather funny. So I'm sure many of you out there saw what happened with Berkshire Hathaway, which is, of course, Warren Buffett's firm. In regards to the actual price feeds that we saw, it's something like Warren Buffett's Berkshire Hathaway lost like 90-something% of its value on the charts. There was obviously, this isn't what actually happened. I think there was an API issue in regards to the price feeds. And this is from Elon Musk, who retweeted this with a laughing face, and it's extremely funny. And this is showing a Bloomberg terminal report that says Berkshire Hathaway declines 100%, most in at least 36 years. And the caption here from Zero Hedges: what can possibly go wrong when you have AI reporting on every market move? And that is indeed what must have happened here. But there was a lot of sort of interesting things going on. It is interesting that Berkshire Hathaway is also a massive holder of treasuries and cash right now. And we are going to be talking about what's happening with the debt markets and ultimately the monetary system, and how we're seeing a real moving away from it. We made a video a couple of days ago and the title was Get Out, and people were really kind of annoyed that we used that title. But what we were saying get out of is the fiat systems. Understand the game that the rich play, understand that the rich own assets and the poor don't. That's why the top 1% grow with the money supply and the rest diminish against it. We want to help people escape that matrix. So let's now take a look at what we've got to get into. And this is from David Hunter. Now, I think David Hunter was somebody who was very wrong in 2022. You know, we were at the markets in 2022, the bear market, and we ultimately got back in 2023, having kind of reassessed things technically and also fundamentally what was taking place. However, David Hunter's theory was throughout 2022, even though the markets were going down, that we were going to enter a kind of blow-off phase for markets generally. And he related a number of reasons that I actually think are rather good, and in enough time people get proven to be right. He is calling essentially the dollar to go to around about 80. The Dixie, we're going to be looking at that. But he says in this tweet, the US dollar is rolling over and just beginning its next leg down after spending the last 17 months in a long sideways consolidation. My downside target remains 80. The Euro, Yen, GDP, which is Great British Pound, GBP I should say, CAD, which is the Canadian dollar, and AUD, which is the Australian dollar, are all positioned for a big upside versus the dollar. Rates also rolling over, steepening melt up just ahead. And we absolutely agree with this. So the dollar, why does it matter? So this is our view on the dollar. We've been in this sort of channel, this ascending channel since 2008 when we officially entered communism. And those of you might get that analogy, some may not, when kind of state and a central bank essentially become one with all the bailouts that took place. Just to put those bailouts into perspective in regards to just how far along we've came, the bailouts that took place in 2008 in the US were around about $500 billion. okay? 500, $600 billion around there, in between there. Today, we're at a stage where we're literally printing trillions. And it's no coincidence, and this makes us rather skeptical on the origins of Bitcoin, that Bitcoin came around at that time and has been unbelievably right. And we're going to talk about the flight that we're seeing from a dollar system, a debt-based system, to gold, and Bitcoin is going to outperform gold. Risk generally is going to do absolutely spectacularly, in our opinion. So I actually agree with what David's saying. I can see merit for the dollar rolling over here. The dollar has been going sideways really since, and let's bring up oil and the dollar. Inflation started to also go sideways. So inflation was rather aggressively downtrending, and then it hit a kind of support, is probably the best word for it. And it's been going sideways, and the dollar's been going sideways with it. Well, what's the kind of fundamental reason behind that? Rates drive the dollar. The yield market, more probably so, they've been going sideways as well. We're looking for a continuation in the trend that we were in before we went sideways, which saw assets do absolutely spectacularly. Just to quickly add to that, we've got Jim Bianco here saying Brent crude falls below $80 a barrel. First time since February. Is it this easy to forecast yields? Just watch crude oil. Is OPEC more influential on the 10-year yield than the FOMC? Yes, if you understand what is driving the FOMC. And if we take a quick look at what OPEC are essentially doing, OPEC plus decision to increase oil supply is a bearish surprise for the markets. Goldman says, I'm going to take the opposite of that. More supply equals, as long as the demand stays the same, it's probably less because we're going into summer. That's going to see oil roll, which is going to ultimately see the dollar roll, which is going to see, to bring our risk assets on here, risk assets do well. Bitcoin in orange, SPY in baby blue, and gold in yellow. You can see risk assets perfectly bottomed at a point when the dollar eventually rolled over. So we agree with what David Hunter is essentially saying here, and that this is going to see assets do rather well. Let's compound that a little bit further and look at a tweet from Robin Brooks, who essentially says deflation is coming. Core inflation in Japan, red, just fell below 2%. Woohoo! And the Eurozone, yellow, isn't far behind. Both Japan and Eurozone had borderline deflation prior to the event that shall not be named. And that's what we're going back to. There never was demand-led inflation in either place. No, it was all monetary-led inflation. And a great example of that is when they used to use tobacco leaves in the United States. When everyone started growing tobacco, you went from needing one leaf to buy a pint of milk to, 20 of them. And this is how inflation works. It's not really a demand-led thing, more a supply of the dollar or whatever currency it is led thing. And you can see this is essentially what is being looked at. So we are very much, and we continue to bring up Stan Druckenmiller. And I don't see people giving too much emphasis on that. He is a hero when it comes to the market. Somebody that's provided a 30-year average return well above the average, knows what he's doing. And when he moved from NVIDIA down to the IWM, which is the Russell 2000, that is a vote of confidence that rates are coming down and a vote of confidence that risk is doing well, going to do well. And then when you come over to Allincrypto and you look at what we're doing and all the work that we put in on monetary policy, we just showed you our theory on the dollar, what that's going to mean for risk more generally, all our technical analysis. We've made so many targets. Even the Dow Jones made its target for us. Microsoft, many altcoins. Bitcoin made its lower down targets, now on a bigger one. We can go on and on and on. You get this perfect picture and synergy of markets. So we do believe that the dollar is potentially on its next leg down. David Hunter's target's well below ours at 80. Now that would see assets do spectacularly. Again, just to bring up that correlation again, once more, we'll take oil off just because it's probably confusing quite a lot of people. I think oil's going to continue to roll. Yeah, we're seeing a bit of strength with the dollar today. We're going to see Europe potentially lower rates on Thursday. The Fed won't be too long to follow, in my opinion. Ultimately, everything is coming together. And the only thing, and we can't rule this out, we can never be 100% on the markets, but we go with what's more probable. The only thing that can put a dampener on things is essentially some sort of an unforeseen event, which they may bring about for who knows what. Let's say the wrong presidential candidate gets in or whatever it may be. So we can't rule that out. we look at the yield curve and things like that, which we've not spoken about. Maybe we do a video on that later on in regards to all of that. But there's a great time ahead for risk. Things are reverting back to the trend that was in place with inflation. PCEs weren't too bad. Yes, we're seeing a bit of a strong dollar, but the eventual direction for the dollar is down, which is going to see assets go up, which of course is coupled with all the sort of technical work that we've done. Before we dive into technically where Bitcoin's out total to and look at a number of other things, let's just talk about what's actually happening with the monetary system. And this is a report from Forbes. The Fed quietly admits gold is replacing the dollar as collapse fears predicted to trigger a 15.7 trillion ETF Bitcoin price flip. Wait, what? Why are they bringing Bitcoin up here? Well, because Bitcoin is in many ways the same trade as the dollar. Sorry, the gold. It's an anti-dollar trade. When I say, and let's just put the camera back on myself to really emphasize this point. When I say the Nikkei is a short yen trade, there is so much alpha in that saying. Assets, which is why the rich get rich and the poor get poor, are a short currency trade, and your buying power is diminishing year over year and accelerating at an ever greater pace, which is why we're seeing things like gold, why Bitcoin is doing and going to continue to do very well. Not to mention all the innovation that distributed ledgers are bringing to the world in regards to AI. Bilaji now talking about how a distributed ledger can be fantastic for AI. Even the Bitcoin maxis are now warming up to the kind of views that we have here on the channel. So let us continue. So this is foreign central bank transition towards gold. You can see central banks accumulating gold at a record pace. We've got a global central bank gold holdings as a percent of foreign reserves, precious metal industry performance, and we've even got miners that are looking to make a serious move. Now, why is this relevant to the cryptocurrency space? Well, because if gold's going to do very well, and remember we've got technical merit to suggest gold is going to do well, Bitcoin is going to be doing, which is all technically signaled, and we've got higher projections for this, even better than gold is. So in a bullish environment generally, Bitcoin's going to be going up more so than gold. And if it was a bearish environment generally for risk, Bitcoin would be going down more so and in a downtrend against gold. Bitcoin's also in an uptrend against, of course, the NASDAQ, the SPY, and we are unbelievably bullish on gold, ladies and gentlemen. We have and are well on our way to that sort of technical inverse head and shoulders target, and there is broader structure. There's also broader structure on silver. It doesn't matter where you look, risk is going to do well. David Hunter, I think, really adding a lot of kind of credentials to that in regards to the dollar and how pivotal it is. We've looked at the dollar, we've shown you our theory on it, how that's going to affect risk. We also have news talking about the system that the FDIC just reported that 63 banks are on the brink of insolvency, collapse, as they have $517 billion of unrealized losses in Q1 2024. Remember the bailouts, the total money for the bailouts was just under $600 billion. QE is about to explode. And what does he mean by that? Well, it goes back to our thesis on total term, why we're actually bullish on the bond market, which means we're bearish on the yields, which people don't understand. They say, how can you do that when we're printing so much money? They're going to be refinancing $9.3 trillion worth of debt at a significantly higher rate in the next 12 months. How can you possibly be bullish on the TLT? Well, we are technical analyzers, ladies and gentlemen, and that is it for us. That's where we get our assumption on the markets. I think this stands a good chance of at least basing out. Why is that? Well, we have a bullish divergence. We also have a real increased amount of volume showing that there's more players in the markets, and the price isn't going down. So there's a kind of equilibrium right now, buyers and sellers. And on top of that, the Fed cannot allow this to go much lower, certainly given the dire straits that the system is already in. And we've already seen their willingness to step in with Silicon Valley Bank and First Republic and a number of others. So them stepping back in means that we've got the continued issuance of debt, but we've got the buying up of that debt, which is increasing the money supply once more. And we know what assets do in regards to the money supply, which is internally going to lower the dollar. You can see, this is macro. We can take this right down to the micro in regards to identifying individual patterns on individual charts. We also have alleged news. I don't know how true this is, but this is from Vandel Black Swan Capital, somebody that's massive on XRP, and we do think XRP is going to potentially play a role. We'll be releasing a video on that tonight in the new financial system. Saudi Arabia is not renewing the 50-year petrodollar agreement with the United States, and it expires on June the 9th. which is interesting, 2024. So how many days away is that? 4, 5 days away, 6 days away. For those who don't know, the petrodollar was established in 1974, 3 years after the US abandoned the gold standard. Under the petrodollar agreement, Saudi Arabia agreed to sell oil exclusively in US dollars in exchange for US military, security, and economic development assistance. Now you know why gold is moving. So what are we going to start moving things into? People are waking up to the hypocrisy and bureaucracy of the dollar-based system, and they're saying, why are we doing this? And if all of a sudden you have Bitcoin and distributed ledgers and a global sort of currency in the mix, it's a great picture. Let's finish things off now on a little bit of technical analysis on Bitcoin. The plan is still very much in play for us, ladies and gents, and let's dive off of the monthly chart, because we don't need to be on the monthly chart. We have a higher technical target of 151,000. We did also identify a potential smaller structure that we're still watching on the daily time frame, which could be a bit of an inverse head and shoulders. You're forming that right shoulder, and that might take up to 91,000. Total 2 is also very much on the term. In our opinion, we're just waiting for that right shoulder to complete, which is going to see a 3x of the altcoin market, over a 3x of the altcoin market, and really to compound everything, just to add a little bit of extra flavoring to the mix. This is Grayscale's large cap fund. This is Bitwise's top 10 crypto index. And this is 21 shares, crypto basket index. All look increasingly bullish. So we have a beautiful picture being painted on a macro sort of scale, right the way down to a micro scale in regards to looking at top 10 crypto index funds and things like that, and also individually. Ladies and gentlemen, you need to arbitrage the fiat systems, and the way you can do that is with assets. We're not advocating for everybody to be all in crypto like I am. It's a risk I'm able to take as somebody that's at the age that I am, with the sort of financial commitments that I have. Everyone's situation is different, but you need to own assets in some form, shape or other, whether that be gold, whether that be stock market. I just happen to think and believe, and we've shown you that with Bitcoin against gold, Bitcoin against the SPY. You can also divide total 2 by it, that crypto is going to be the fastest horse in that race. It's going to be the furthest away from that building when it explodes. On that note, I'm going to love and leave you. Thanks a lot for watching. See you all in the next one.